banking stocks are still gaining momentum despite earlier sell-offs in the Nigerian equities market as investors' appetite for risk-on assets intensified in today's session. Oreoluwa Odetunde, the head of research at Anchoria Asset Management, joins me now as we will look at the markets this week. Thank you so much for your time today, Oreoluwa. Can you just first break down what we've seen so far this week in terms of what played out there? We saw that volatility in the banking space due to the news flow from the central bank. And how's that shaped sentiments this week?
Yes, certainly. I mean, just like you rightly said, we did see a circular that was released by the central bank over the weekend that addressed the regulatory forbearance exposures for the banking sector. And we started to see that, that had a knee-jerk reaction to the market at the start of trades on Monday. And as of Tuesday, we saw that the banking index was actually down by about 5% week to date. But we started to see a bit of recovery happen later in the week. As of Wednesday, the banking index had already recovered by about 3%. So it had already shaved off those losses that we witnessed at the start of the week. And, to close out the week, the banking sector is already up by about 2%. So, what majorly drove that, positive sentiment we started to see after the negative sentiment was that the central bank, released another circular and stated that this regulatory forbearance targeted specific banks and there was no major concern regarding the capital buffers of the banking system on any fragilities that investors were pricing into stocks of the banking sector. So apart from that, we also saw that banks that were also targeted by this regulatory forbearances also released some circulars and stated that they intended on meeting up or regularizing their books and are expected to meet up with dividend payments by H1 2025. So, investors priced all of these sentiments into the market, and we started to see, that positivity along the line.
Yeah, but let's get your assessment of the second quarter and all. Yeah, we've seen some sectors did quite well. Looking at the consumer goods sector, one of the key beneficiaries of this second quarter here. And I'd love to get your assessment of how the market performs in the second quarter.
I think the market performance was actually really strong. When you look at the performance in May, I think the market month on month, the ASI increase we saw was around 6 to 7%. And then we've seen so far in June, we've seen a gain of about 1.95%. So I think generally we had a very positive Q2 performance. And I think it's just going forward, we tend to want to be assessing the outlook of the market in H2. So we do expect to start to see earnings releases for a lot of corporates start taking place in July. And aside from that, we've also started to assess a re-entry of foreign portfolio investors into the stock market. So you'd see that in terms of the sectors that they tend to like, you'd see that the consumer goods space is one sector that foreign portfolio investors are very attracted to. And that's why you've seen that on a year-to-date basis, the consumer goods sector is up by around 45%. You'd also see some attraction towards the banking sector as well, which is up by around 14% as well. And we've also seen that they've added the agricultural sector towards their preference list. We've seen that, stocks like Presco as well as Okomu has gained by over, 30% month to date. And that's because they've become sort of a hedge against FX volatility. So, foreign portfolio investors are also taking some liking to the agricultural sector. So we still expect that will continue to play out. So you see that in terms of, we are seeing a situation where global portfolio managers are looking away from, the developed market assets, and they're looking toward emerging market assets and frontier market assets like that of Nigeria. So we still expect that, we still expect that this foreign portfolio investment or inflows will continue to drive market sentiment. And like I also mentioned as well, the earnings releases we're expected to see for Q2. I think that there will be a lot of attention paid towards companies where we expect to see a bit of volume recovery. So we've seen that pricing power has been what has driven some of the earnings growth that we've seen for some consumer goods sector as well as industrial goods stocks. But we still expect to see a bit of volume recovery happen. So we think that in terms of the winners, it will be guys who are able to deliver on volumes, guys who are able to deliver on margins, and people who have low FX exposures. We think that, in terms of that, those stocks, or especially in the cyclical sectors, the industrial goods sector as well as the consumer goods sector, they should continue to do well. We think that for the banking sector, there will be a lot of focus on the earnings quality as well as the asset quality of most of those banks. In terms of valuation, we already know that the banking sector is a very attractively priced sector to a lot of investors, but I think there will be a lot more focus on the earnings and asset quality of the banking sector.
Yeah, interesting look when you put it that way, especially the issue around the falling portfolio flows that are coming back into the market here. But in terms of the catalysts that could continue to support the markets for the third quarter, what are you looking at?
So, like I earlier mentioned, definitely we see, this Q2 earnings continue to drive market sentiment into the third quarter. Apart from that, we also expect, we are seeing very high system liquidity in the fixed income space. So we do expect that with declining yield environments, some of that liquidity will be making its way into risk assets like the stock market. So you'd see that in the treasury bill auction that we had this week, we saw that yields fell, stock rates fell to around 18.8%, and in terms of yields, it was around 23% level. So that's like a 1 year low yield that we've actually reached. And then in terms of also the bond offer circular that was released by the central bank, you'd see that in terms of the offer circular, it was around 50 billion that they expect to raise on each maturity. Two maturities, they expect to raise around 100 billion. And this was it was not a slight, a lot of differential from the initial bond calendar that we've seen for Q2 2025, which stated that they intended to raise about 300 billion to 400 billion in the market. So it definitely just says to us that there's a lot of liquidity in the market. So we think that some of that liquidity will flow into the equity market. And aside from that, we know that pension fund administrators too are also looking to reallocate, some of their funds. There's going to be less dependent on FGN securities. So we think that some of that, liquidity will find its way to the stock market. So, putting all of these factors together, we do expect that those will be the major earnings drivers or market drivers in Q3 2025.
All right, interesting to watch. Then we'll keep an eye to see how things pan out there. But thank you so much for your time on the show. Oreoluwa Odetunde, the head of research at Anchoria Asset Management.